Welcome traders! Today I will be starting a new series of videos where I look deep into the value and potential of some of my most favorite and rewarding stock picks. These are stocks that I have personally traded with success or ones that have piqued my interest due to their performance and growth. For this review, I will be getting into the stock specifics, assessing the stock performance, looking at the company financials, as well as assessing the financial health of the company. We'll talk about the potential for short-term gains versus long-term gains. And finally, I will be giving my opinion as to whether I think the stock is of good value and whether it will bring a good return on investment. Beware, I'm not a financial advisor and this review should not be taken as financial advice. I do encourage you to do your own research into any potential stock. For more information, please see the disclaimer on the screen. And shout out to all my new subscribers. I do appreciate you being here and thank you greatly for tuning in. And for those of you who are new to the stock market and are still learning, I will show a guide as to the terminology and definitions that I will discuss towards the end. Now getting straight into it, we've all heard of American Airlines, ticker AAL. So they're presently one of the biggest airline companies servicing the US as well as the international airspace. They survived the very fated tragedy of 9/11, only to be hit with yet another rough patch financially with the current coronavirus pandemic. So this company is currently trading at a price point of $10.31 per share. 52-week low was $10.01, 52-week high $35.24. The average traded volume is 46 million shares daily. They have a market cap of 4.39 billion. The number of free float shares available for public trading is 4.19 million. The current analyst rating is that the company is undervalued, and I'll show you why in just a minute. So for the short-term outlook, this current stock value is trading at a huge discount in comparison to its 52-week high price point. So in relation to that, we can say that the current stock price is at a 71% discount from its high. In terms of volatility, so how much range the stock trades at, that is also extremely high. So the volatility is currently at 74.67%. So we can say that the stock is extremely liquid right now, which is said to be very beneficial if you're looking to get into it for the short term. The volume of shares traded at the last market open, which was April 24th, was 64 million shares. So we can say that this stock is extremely popular right now and in high demand. The forward PE is 8.03%. So this is not as high as it could be. It could be higher, but putting everything into context, I would say that the short-term aspect of this is that it's a good stock to buy short-term. So that means it's good for day trading and swing trading for the short-term trader. For the long term, this company has a cash flow of 3.83 billion, a current debt of 33.44 billion, that is before the bailout, which I will get into later. This results in a cash to debt ratio of 11.45%, which is not a very high score in terms of financial health. And say if we were to take 100 and divide it by 11.45, we get the result of 8.7, which demonstrates that it would take approximately 8.7 years for American Airlines to pay off their debt at the present rate. So obviously with this ratio being low like that, I would say that this company's financial health is not that good, but putting everything into context, I would say that due to the fact that the current price is so low in comparison to its 52-week high and the potential for growth over time, this could still be considered a good long-term investment. As far as investor perks, annual dividends are 40 cents per share, so that's a good thing. Now, if we look back to the stock crash that happened last month, we see that the stock dipped to 10.25 on March 23rd and also dipped again to 10.06 on April 2nd. So this represents that the lowest point people are willing to pay for the stock at market lows. I've actually seen this stock dip lower than this, but not hold its value over time below the $10 price point. So that's what I believe the public feels the stock is worth at its lowest point. So in answer to the question of, is this current stock price worth it? I would say yes, it is. Now looking at how much growth you can expect this stock to have in any given week, I took a snapshot of the growth of the stock from the period of April 6th to April 9th, with April 10th obviously being closed for Good Friday. And during this time, I found that the stock gained a value of $5.43 during that period, with a subsequent growth of 52.71 during the same period in percent. So in terms of how quickly you can expect a return on investment in any given week, I would say that there is a strong chance of you having a good return on your investment within the stock very rapidly. Now, if I were to buy this stock, I would be looking to get into it at around the $10 price point, as I said previously, and looking at it speculatively. If we were to buy ourselves 400 shares at the $10 price point for an investment of 4,000, and say if we allowed the stock to grow until it hit its previous 52-week highs, the stock could potentially be worth over 14 grand for only a 4,000 investment, with a potential return of over $10,000 during that time. So in terms of its potential, I would say that yes, there is a great deal of potential for profit and return on investment with this stock. So I recently swung the stock AAL several times for a good profit. What I did was I purchased 300 shares at $10.64, then another 100 shares at a lower price of $9.15 on the 1st and 4th of April. And I sold the shares on the 7th of April at a price of $11.41 with a profit of $920. And I have personally used the same strategy multiple times on this very stock, and I really, really love it. So there's just a concrete example there. Now, in regards to the company's publicly reported earnings, the quarterly Q1 earnings is due to be reported on April 30th, and I know that a lot of investors will be eagerly anticipating that report. However, the company did release an 8K operations report, of which I will attempt to summarize for you guys, although please note I'm not a certified analyst, so please do look into this for yourselves as well. So essentially, the report says that American Airlines has accepted the government bailout CARES loan of $5.8 billion. The loan must be used for employee wages, salaries, and benefits. Executive bonuses will not be allowed during this time. Stock buybacks will also not be allowed during this time. And I do know that there's been a lot of, public outrage in relation to companies using the bailout money from the government to buy back their own shares, so that they can retain their value, which is, of course, very unfair to the average trader like you and me. Furthermore, the loan must be repaid with interest in stocks, so the principal loan amount will be $842 million. There will be a payable interest of 1% annually for up to 5 years and 2% with interest annually thereafter for up to 10 years. They can pay off the loan early without penalty. And something I found really interesting and not necessarily maybe good is that the government will have an ownership of 13.7 million shares at a price of $12.51 a share. And finally, the government will have the rights to purchase a further 6.7 million shares of stock in the future. So in light of this report, this confirms what we all knew, which was that the airlines are in dire straits with being shut down due to the pandemic and all, but the government has extended them a lifeline at a huge cost to these companies in order to keep them afloat for the interim until things balance out. And as you know, obviously, we don't know how long this pandemic will last for, probably until we get a vaccine for the cure. So with that said, overall, I feel this company is a good buy for the short-term trader. And as far as long-term, it could also be a good investment down the road, especially since it is at such a discounted rate, which will most likely be dropping even further as more bad news and earnings are released to the public. So I do recommend, if you are interested in this stock, then wait until after the earnings report before buying any shares so that you can buy them at the lowest price point. And I do expect this stock will most likely drop down to at least the $9, maybe even $8 range. So if you already have shares in this company, perhaps you could sell them and buy them back at a lower rate, or maybe even just average down. Nothing wrong with that. But I highly anticipate the stock bouncing back every week as news of the pandemic stabilizes and the economy slowly gets back to normal again. And I fully anticipate the public will clamor to start flying again once they're able to do so. So I do see this stock, recovering in time in the very near future. So I recommend keeping a good lookout for stock picks like this one, as they can be highly lucrative and rewarding. And if you would like help with planning your trades as well as choosing which stocks may be right for you, then please stay tuned, as I will be coming out with new tutorials and new stock picks within the series every week. And you can also follow me on IG for an instant follow back at Trade With Me. That's a 3, not an E at the end. And you will be able to interact with me as well as see my daily profit and loss, motivation, news, and stock tips. And with that said, I do thank you for watching, and stay safe, people. Peace out.